Welcome to the show. Today we have Sean Fu from Singapore. We're big fans of Sean. I watch every broadcast. He's very gifted at sort of a unique analysis with extraordinary strengths across all verticals, including geopolitical, macro, and macroeconomics. And he weaves silver and gold into the commentary, but doesn't really buy into all of the mainstream talking points or what you'll hear on some of the channels here in the Western Hemisphere. So we need to get, especially with the BRICS meeting coming up starting tomorrow in Johannesburg, South Africa. Many of the members of BRICS are sort of near Sean's part of the world, where here in the West, we're sort of censored from a lot of those updates. So we thought the timing was perfect to have Sean on today. And we're so honored and delighted and big fans of your show. So let's start talking about BRICS and what we know about everything from people exiting the dollar, as you see, and maybe why you think that is. And then we'll just go from there.
Sure. Yeah, thanks for having me. And let's just dive straight into the BRICS, right? You know, it's kind of funny when you said there's quite a bit of a news blockade when it comes to the West for the BRICS, right? Yesterday I kind of did a bit of Googling, searching online. It's all about negative news about the BRICS, how they will fail, how, currency is impossible, and how China and India, so much problems going on, so much tensions that the whole bloc can't really function as a whole. But we kind of dive back to the reason why BRICS is actually on the verge of expansion, right? There are many countries looking to join the bloc. There's Saudi Arabia is on the verge of joining. We have heard of rumors like Indonesia, as well as Iran, and many other countries. I think over 20 countries are looking to join the bloc. And it all stems down to the idea that they want to diversify away from the world. They want to diversify towards the global south. They want to break away from the dollar system. After the Russian sanctions came online, they took away the reserves, they blocked the country from the SWIFT system. Every country kind of had a bit of a wake-up call. Hey, my reserves could always get taken away. And even if it doesn't get taken away, I could get blocked from the SWIFT system. And even if the SWIFT system doesn't get blocked, there's always the problem of deficit spending. And that's devaluing the dollar. And that's also devaluing the rest of the world's wealth. So right now, we're coming to a kind of inflection point where we are starting to see many countries actually trade away from the dollar system when it comes to commodities, right? And there's a lot of talking points about how the dollar system won't be broken. And I would like to say that it is true and untrue at the same time. So when it comes to the dollar system, we got to think of it in two spheres, right? There's two hemispheres of the dollar system. One of it is the debt market, when you issue the US dollar bonds, the treasury market, and it goes all the way down to the euro dollar system, where other countries, other private banks are actually issuing dollar loans, right? And then there's also the commodity markets, where you buy oil, you buy wheat, you buy gold, you buy silver in terms of dollars, or if not dollars, another currency. Now, when it comes to the first market, we're talking about the dollar market. I think it's around $25 to $26 trillion strong just for the treasury market. I think we need to wrap our heads around that market will likely not be broken anytime soon. Probably it won't take 5 years, it won't take 10 years, probably take 20 or 30 years, right? Because there's so much interdependency across the entire world. They're all tied to the treasury market. Companies are tied to it. Corporations are tied to it as well. Individual investors like us. I myself am personally invested in treasuries as well through the money market funds. So there's so much dependency, so much money actually lifting it up. But the true de-dollarization actually comes from the commodity markets, right? And that is where I would say the start of de-dollarization will actually begin.
Well, that's a great summary. That's something that even the alternative media here, like Kitco or Stansberry or Palisades, haven't brought up the way you just broke down the way the commodities are the key. Is that because the war and the fact that there's the architect in Russia, the economist Sergei Glasiev, who's had the influence to tie a barrel of oil to a gram of gold? Is it that simple, or would it be do you see the whole basket of commodities trading in some sort of new denominated currency, or can they just use gold?
Well, I think it's even simpler than gold, right? We've heard about the 1 gram of gold to 1 barrel of oil, and it will create such an arbitrage opportunity that the price of gold will go up and then the dollar will go down, right? But I think it's even much more simpler than that. When it comes down to the crux of it, countries don't want to hold too many dollars. They don't want to be so dependent on the dollar system. And we just need to look back in 2022, or was it 2021? I think around that period, there was a huge currency crisis. Essentially, there was a shortage of dollars. I guess if you could remember, the dollar index went from like 95 or maybe 100, it shot all the way up to 110 and above. And that caused a lot of dislocations, especially when it comes to trade balances, when it comes to central bank reserves. They didn't hold enough dollars, especially for the emerging markets, right? And that's why you see all kinds of crazy inflation numbers, Argentina, 50% inflation, all the way to 100%. Then we saw countries like Pakistan, they were running a lot of dollar deficits. They were practically heading to the IMF, asking for a dollar loan. And I think it's because of that dependency on a dollar itself, not really on gold. I mean, that's a separate mechanism we can talk about, but it's just about how do I get the basics of life, the basic commodities, your wheat, your oil, your base metals, without having the need to transact in dollars, right? That's why recently we saw India trade with the UAE. I think it was 10 million barrels of oil. The Indians paid them the rupees, right? And then we had other events such as China buying LNG using the yuan. And all these are coming at a point where the Russian sanctions have already been done for the last 12 months. But this snowball is building and building, and it is keep evolving. It's going to grow bigger and bigger until it comes to a point that it eventually affects the debt markets, right? But how long it will take, it could take 5 years, it could take 10 years. It really depends on how the cards unfold, and especially if Saudi Arabia decides to one day join the BRICS.
Well, that's a good point, and I like the way you broke that down in terms of, it seems like there's always a way to navigate an end around to a sanction. Recently, we did see Iran transact. Even though we have sanctions against Iran too, there's still, and I believe, of course, with Venezuela, whoever our handpicked enemy of the week is, they seem to always find a way to transact their oil, under our radar, which brings me to China. One thing that we know about the digital age is whether it's the military, our healthcare, or our banking system, there's so much dependency. Here in the US, people are obsessed with streaming Netflix and Hulu and Apple TV. And then we have this, this platform we're on right now and social media. It seems like everything hinges on the semiconductor. And it appears that China sort of has the market cornered on that. Would you put the semiconductor in the basket of commodities, even though it's really not?
Well, I would say yes and no. China's in a very interesting spot when it comes to semiconductors, right? I mean, when it comes to some of the biggest tech firms in the world, it's undeniable that the majority of them actually lies in the United States as well. You're talking about like AMD, NVIDIA, all these big names with very, very good talent, and they have quite a bit of a head start when it comes to China, right? It could be anywhere from 2 years, 10 years, they even have people saying 20 years. But when it comes to the raw materials of developing the chips itself, China has some would call a stranglehold on the rare earths material, rare earth elements, right? Gallium, all this. So, and recently China just, what I call it, a sanction, or they just thinking of curbing imports to the United States. So right now there's this very weird kind of trade war going on. China doesn't really find it sensible to maybe supply the raw materials to the United States. And the US, on the other hand, they're trying to cut away all the investments to Chinese companies in the tech sector and trying to stop all the imports from even some of the allied countries like the Netherlands to China as well. So I think, especially when it comes to the next 5, 10, 20 years, right? Especially when you look at all the technologies like ChatGPT, right? They need all this kind of advanced chips to really evolve, I think that's going to be the new battleground. And that's why we are seeing so much tensions when it comes to Taiwan's TSMC, and Taiwan's trying to diversify their factories all the way to Germany, but that's a bit of a crazy idea because energy costs, they are so extreme. So it's really one big mess. And as you said, countries try to isolate, Russia, try to isolate Iran, and somehow they always find a way to trade around it, or they evolve through it. And the same thing is going to happen with China, especially when it comes to the tax sanctions and how they're going to evolve their microchips, right? I mean, there's a ton of Chinese companies that are working hard, working overtime to catch up the gap. There's always a time lag. So the idea is, how is China going to shorten the lag? And what's the United States going to do, to use that time lag to their advantage? And I think that's the big question.
Yeah, and you mentioned Saudi Arabia perhaps joining BRICS. It almost appears, given the fact that when Biden showed up last time, he was shunned.
Right.
Yet the red carpet was rolled out for, members of the East or BRICS. So what it appears is happening is, the U.S. has lost. When Nixon shut the gold window in 1971, at least the U.S. dollar was pegged to oil or OPEC transactions. And now that Saudi is fleeing too, or looking for protection perhaps from Russia or other people that are superpower militaries, it just puts the U.S. dollar, or the optics around the dollar, as we're naked almost without anything backing it, which gets us into the recession narrative here. You had mentioned that there's been all this discussion that the recession just never shows up as it's reported. It's going to be next week, or perhaps it's transitory, like inflation was transitory, right? Then we also learned that recently, there's a denial that there's a recession here in the United States, solely because it wouldn't make sense for the Fed to hike in a recessionary environment. So recession, it's always predicted, but the West is in denial because they can't hike, or the optics of, why are you hiking in a recession? Are you intentionally trying to wreck things? What do you think?
Well, I think it all started back in 2022, right? Remember the time that we had 2 consecutive quarters of negative GDP, right?
Yeah.
It was a technical recession, but we know what happened, right? The White House said, nah, it's not a recession because the job numbers are still so high. Everything is fine and dandy. And when that happened, I think it kind of sent a warning signal to the entire world, to Americans, everyone around the globe, that they are denying reality. They are trying to redefine what a recession is, because it's all about the optics. It's all about perception management, because we all know what's going to happen, right? In 2024, I think it's November, that's when the presidential elections is coming, right? And I think Biden's going to have the fight of his life during that elections. And if we rewind back a month or two, what did he say he was running on? Bidenomics. I mean, to me, Bidenomics is another term for endless deficit spending. I mean, that's my own personal definition for it. But he's running on that. So he needs to keep the entire economy stable. He needs to make sure everything looks fine and dandy. The stock market, if it doesn't go down, if it doesn't go up, at least he has to track sideways all the way until November next year. I mean, look at the people he's going up against. He's going after Donald Trump, who's very disgruntled now. He's going after, one of his competitors could be RFK Jr. himself, who has quite a bit of massive support behind him. So all the odds are actually stacked against Biden. But one thing that he can control is how much he can stimulate the economy with deficit spending. And whether we like it or not, right, we all know more or less around the world that America can always borrow as much as they want. Right? I've heard of a lot of people say that no one's going to buy US Treasury bonds. The Yellen's going to keep printing, but who's going to buy them? And the reality of the fact is that people will still buy Treasury bonds. But the question is at what yield, right? If she can't sell it at 5%, she's going to sell it at 6%. She can't sell it at 6%, she's going to sell it at 7%. But there's still an enormous runway for America to keep borrowing money until Judgment Day comes. And we do not know how long that runway is. It can be shorten dramatically if Biden keeps borrowing money. But it'll definitely last all the way until 2024, 2025, right? And that's why they were so confident to suspend the debt ceiling in June. The moment they suspended the debt ceiling in June, and they really didn't put much of a caps on it, they could actually run enormous deficits enough to keep the game going all the way until the end of 2024. So I guess this is why there's a confluence of factors and motivations that's actually keeping the US economy on top. And right now, you add in a lot of the geopolitical and global economic factors going on, right? We know that right now China is having quite a bit of a problem with the Evergrande, the country garden. And what does this do? When we have a global situation where there's a bit of a confidence crisis in any country, the default response is to run into US dollars, right? That's why we are seeing the dollar index rise up quite a bit. I think it went from under 99, now it's around 103 or 104. So there's this rush towards US dollar cash. And when you're holding dollar cash, there's only two avenues for you to invest into. You either invest into the bond market, so you can get quite a bit of yield, which is ironically quite attractive now, 5 to 6%, or you put it into the stock market. So these are the two avenues where money is being channeled from the rest of the world into the US market, and that itself is also propping everything up.
Yeah, and that was very insightful, and I'm going to pick up on some key things you brought up. First of all, for someone in Singapore to have your eye on this election is very insightful, and especially what we see with the denial of the recession and what you talked about, Bidenomics, which is code word for deficit spending. We've seen here just recently, there's this insane bill called the Omnibus Spending Bill that included just all sorts of pork barrel projects like sensitivity training for the military. And it was $1.75 trillion, and the Inflation Reduction Act, which we know is more like the Inflation Acceleration Act, if anything. And the last bit of that puzzle, which you talked about, is how the existing US presidential regime, in this case Biden, is trying to do anything to get votes, including draining our strategic petroleum reserves. This is something we've seen him do twice, and we're at a level that's never been, it's supposed to be for a wartime, or previous administrations released it during a hurricane or some sort of act of Mother Nature. But we're seeing this done for political reasons to control the perception that there is an inflation, that the price at the pump is remaining stable, but it's such an artificial and desperate maneuver just to stay in office. But earlier you talked about arbitrage, and I could see where this could backfire in terms of the strength of the dollar. If there's a chance, then if these are artificial measures to hammer down the price of oil, like releasing the strategic petroleum reserve, that's manipulating, right? It's not a natural market force. But if oil does go to its natural, most analysts see it going to around 120, and whatever it's trading at today in the 80s, that's a huge move. And if a gram of gold is priced in oil, and that, let's just say that's a 30% move, would you see that the LBMA and the COMEX and the Western prices for gold, wouldn't there be some sort of rush into your Shanghai? I don't mean yours, Sean, but the Eastern Shanghai market for gold. Are you keeping an eye on that difference? And would that create the arbitrage, that the aforementioned arbitrage you spoke of previously?
Well, I think that would be one possibility, but I think the chances of that is rather remote, right? Because I believe that China right now is on a gold accumulation mode. And if they were to try and, spend their gold for oil, that wouldn't be a very ideal situation if one day they decide to use gold as a kind of geopolitical weapon, right? Maybe it's used to back the new currency 10 or 20 years from now. Or maybe they're just going to show that they have more tangible wealth than the United States. But I don't really believe that, even though the Russians are saying, right, they're saying the 1 gram of gold for barrel of oil. I think that's just quite a bit of theory going on, right? It's theoretical. It's a very good idea to really think about it. But I think China is in aggressive gold accumulation mode. So it really doesn't make sense for them to let go of their precious gold reserves all the way for oil. Because if it comes to that point, right, America could also, in a sense, fight back. They can always use their fiat currencies, right? They can print as much as they want. They can debase it. They can borrow as much of it, and they can go out and hoard gold at the same time. So if it comes to that, it'll be another kind of commodity or currency war. And when it comes to that point, it's going to get really messy. So although I understand that an arbitrage opportunity will happen, and if it does happen, gold will definitely be valued all the way back to whatever the price of oil is, right? You know, if the Chinese or the Russians decide to sell gold lower than its intrinsic value in order to, you know, drain the oil or drain the money towards gold, that definitely could happen. But when it comes to the practical world, I think I really don't believe that China is going to do it anytime soon.
What do you guess China has in gold reserves, if you had to guess?
Oh, that's very interesting, right? Because we know that China's a black hole for gold. They keep buying. They're buying from the West. They buy up their own domestic production. Officially, they have like 2,100, right? 2,100. America has 8,000. But I won't be surprised if they have more than America, at least 8,000, at least 10,000 tons.
Right.
I think they have accumulated enough over the periods, and that's just the Chinese central bank, right? I think that's just the PBOC. If you try to factor in the local Chinese people, I think it could definitely be double of that.
That's the number. We think it's 20,000, taking the bank plus the people.
Right. Yeah,
right.
and just to add one more point to this, right? Chinese gold reserves is different than America's gold reserves. What I would like to say is Chinese gold reserves are more mobile. They can use it more as a kind of financial weapon than America. I think I created a video quite a bit a while about why America's gold reserves are technically frozen. They might as well just put it in a museum. They can't really touch it. Because right now, we all know the dollar is a fiat currency, right? And we know that before 1971, it was somewhat pegged to the dollar. So the 8,000 tons that America has, like let's just assume they have all the 8,000 tons, right? It's locked up somewhere in Fort Knox.
Okay.
And yeah, those can't be touched. Because the moment America sells their gold, what's left of the dollar? You don't have anything in a sense to back it up. You're losing your tangible wealth. And that, what will it do? You'll create less trust in the American economy and the dollar. But conversely, America can't add to their gold reserves as well, at least not publicly. Because if they do it, what kind of message are you sending to the world? We, as the holder of the reserve currency, would rather stack gold, you know, that destroys the dollar even further. So they're caught between the devil and the deep blue sea. They can't decrease it and they can't increase it at the same time. But China, they can do a lot of funny things with the gold if they want to.
Okay, Wall Street Silver viewers, you heard it first from Sean. No one in the West has come up with that analysis before. And this is why we have him on today, because that's brilliant. And I believe that based on what you said in terms of that paradox or dilemma you just painted, it's the same thing that an American consumer faces. Is there's all this cognitive dissonance. It's like if we stack gold and silver, we know why we're doing it as a hedge. But meanwhile, you wouldn't believe the attack we get from the West, from all these clowns like Brent Johnson and his dollar milkshake theory, Dave Ramsey, Harry Dent comes on Kitco about every 3 months and says gold's going to $400 an ounce, when we know that the cost of production is approaching, 1,700, which puts a floor on the price of gold. So, this is what we have to endure every day, not one story on Bloomberg, Forbes, Yahoo, Wall Street Journal, but thousands about why we should pile into Microsoft. And some of these accounts like Kathy Wood's ARK was down, 70% in 2022. Do you get that sort of problem in Singapore, or do you think that sort of mixed signaling, or what I call gaslighting, Are
Well,
you
one
familiar with
reason.
that term in Singapore?
Yeah, yeah,
Gas? Okay.
I get it. I get it. I think, yeah. So at least when it comes to Asian societies, right? I mean, Singapore is we are our economy is more Western than Eastern, right? Because we are
Mhm.
closely tied to the American financial system at the same time. But our culture, our heritage, like I myself, ethnic Chinese, even though I was born and raised in Singapore, right? So I've quite a bit of the, the historical DNA that ties me to gold over the centuries. And we all view gold, especially hard assets in Singapore, real estate and gold. These are two of the more stable kind of investment. Every time when I go to a coin shop or when I go to a dealer, I always see a long line of people buying. Always see at least 5 people there. I see 10 people there, and I get pissed off because I have to wait. And sometimes when I'm on the go, I'm a bit of a patient guy, so I have to wait just to get an ounce, just to get 2 ounces. And the premiums in Singapore are rather low. And that kind of shows you that how we do not really put much barriers to gold ownership, right? I'm not so sure about America, but I believe there are a few states out there that actually charge sales tax on gold or silver, right? I think in Singapore we abolished it in 2014 or 2017, right? Either one of those years. So right now we don't have to pay any capital gains, and we also don't need to pay any sales tax on gold. So right now, ownership for gold in Singapore, I would say, is very, very healthy.
A great point. We do have a sort of a brilliant nonprofit here in the States. It's called the Sound Money Defense League. And it was the founder, Stephen Gleason of Money Metals. And they are trying to go state to state to say, what are you clowns up to if you're charging a tax? And I think they've been successful. There may be 4, 5, 6, or 7 states left of the 50 that still are involved in this sort of counterintuitive and pretty much an irrational act to tax. It's almost like, have you ever gone to a money machine and you just
Right.
need $20 and there's like a $2.75 service fee on getting cash. I have this problem with ever paying for money. It just seems insane. The culture
But
of buying gold in the East that you described with the line and with lower premiums, and you said it's in your DNA. Tell me a little bit about what you think from your ancestors' point of view. Is it because they've gone through hardship and they know that things do return to gold and silver as money? Is it part of that sort of legacy in your ancestry?
Well, I would say it's mainly wealth preservation, right? It's all about preserving your wealth over long periods of time, a brain dead way to secure your legacy, right? So let's talk about China in the past. I think China was the first inventors of paper money, right? So they were the first
Right.
fiat people who created fiat currencies, and over time the same problems turn up over history. People tend to issue more notes than how much gold was actually in the reserves. So over time, China had their own inflation problems over the various dynasties. And in Singapore, we were invaded and conquered by the Japanese for 2 years. I think it was 1943 to 1945, along that period. And during that time, Japan actually decoupled their economies for all the conquered colonies away from Tokyo. So in Tokyo, they were using the yen, right? But in Singapore, we were actually using their own issued banana money because the fiat currency note had a lot of bananas there, and they overprinted. And a lot of people who saved in that, they lost a lot of wealth. And it was the people who saved in gold, it was the people who saved in real estate, who were actually prospered. They kept their wealth. And just one thing about gold versus the rest of the other asset class, right? A lot of people like to compare gold and stocks and real estate together, right? They like to say that our stocks have overperformed over time. But if you compare gold versus many stock markets in the world, you can actually see a lot of stock markets have been stagnant while gold has actually gone up. One of the main reasons why gold lost to the S&P over the long period of time, over the last 20 or 10 years, it has been neck to neck. But over a long period of time, it actually lost because America at that point of time was tied to the gold standard, and that allowed them to really have a lot of through wealth, and a lot of countries at the point of time they trusted America, so they loaned them a lot of money, and that kickstart the entire industrialization and the modernization, and that led to this phenomenal growth up. But going forward, do we know whether America will outperform the rest of the countries again, right? We're talking about the BRICS countries going stronger. China's stock market might be battered down now, but over time, it can always outperform America. And we just don't know. But what we do know is that gold over a long period of time successfully stores your wealth. So if you just don't know where to put your money, you don't know whether you want to put it in China, you don't know whether you want to put it in Brazil, whether you want to put it in America, the default option is to have some in gold.
What do you think about silver in the role of, based on the same worldview you just painted,
right?
What's your feeling on silver?
All right, I think silver is a bit of a mixed bag. I have accumulated quite a sizable position of physical silver, but I am not adding any more to it, but I'm not selling my current position.
Okay.
So there's a bit of a dissonance, people would say, right? So I would say that silver, it's no longer a traditional monetary metal. And I do not believe that it'll come back down to the 15:1 ratio. You know, the 15:1 ratio, we all know that during the time of the Romans, or whether it was America, they pegged it 15 ounces of silver to 1 ounce of gold. But as with any kind of government intervention or government decree, it doesn't last for long. So as we can see that gold and silver, the ratio has actually gone up. If I'm not wrong, somewhere between 70 or 80 today.
Mm-hmm.
And it kind of reflects the situation that we are in, where silver is seen more of an industrial / monetary metal, while gold is seen mainly as a monetary metal. And going forward, if we do have a crash, we could see silver come down while gold could actually stay in value. But going forward, especially when we are moving towards a green new world, you know, we are going full Greta Thunberg, we are going full green energy, we are going full solar panels. There is going to be a period where silver could outperform gold, right? And it really depends on how, as investors or speculators, we want to play it, right? So at least for me, I will not touch my physical silver position unless there's really an emergency. And it's a bit of an end of the world apocalypse scenario where if we do go back to hard money, that stash will be infinitely valuable. But at the same time, I am dabbling a bit in the paper markets as well. I do hold some shares in the PSLV, you know, the spot fund. And if silver has a very nice spike up, I'll be exiting that. And when it comes down, maybe I'll add on to my gold or physical silver position. So I kind of have a tough one saying that silver is a better effective store of value than gold. But I would say the potential for gain for silver is much higher than gold, if that makes sense at all.
Yeah, I think you said a lot when you said you're not going to get rid of any of your positions.
Right.
And you also said a lot when you talk about the transition to, we call it, you know, net zero or ESG standards, that, like it or not, they are here. They've arrived. The G7 has embraced it. It's promoted by the World Economic Forum, and there's not a Fortune 500 company that doesn't have a large commitment to what they're calling sustainability. So if you take just the solar energy, the wind, just the enormous amount of battery metals required to go basically in a way off grid. You got to bring that wind energy back to the power grid. You need to store the solar in batteries, and they're finding now that the batteries, the lithium ion battery is inferior to a silver zinc battery. So we see, if you look at any electronic board, at every intersection of connectivity, silver plays a vital role. I think there's 10,000 applications for silver. It's ductile and it's malleable, so it can be stretched into a thin wire as well as molded into any. The physical properties are just so unique, and it's still affordable. But I like what you said about it rocketing, having that sort of explosion. And the way we see it is the stock market may dip to 29,000, and the Dow to gold ratio will probably be 10 or 11 to 1, putting gold at around 2850. And you're right, it's not going to go to 15 to 1 on the gold to silver ratio. But even if it moved to 60, you still have $35 silver. I mean, that's the math in my head, which would be a heck of a move from $22 silver. I mean, I'm not a triple digit silver person. It's going to be in the mid 30s, but that's still an incredible move. What else do you think's going on just in your part of the world? What are you keeping your eye on for? Perhaps give us an idea of what your next show is going to be about. And we're going to put links in the description field on where you can. Sean breaks down geopolitical and economic things better than people here in the West, in my opinion. So we want to make sure that we get you some followers, vice versa. So let us know what your next. Can you let us know what you're scooping? That's the term we use. Like, you got a big scoop as a journalist. You're a great journalist.
Well, I'm closely looking at what's going to happen from the upcoming BRIC Summit, right?
Okay.
Because for all we know, it could be the next big thing. It could be the next big geopolitical and economic shift, or maybe it could be just a nothing burger. So we really need to see what comes out from the summit. And right now, I think we can safely put apart two things and call it near impossible. I just want to take away the improbable so people get a bit of an idea of what's possibly going to come, right? I don't think they're going to come out with a common currency anytime soon. And I don't think they're going to come out with a gold-backed currency tomorrow, right? Literally tomorrow. Right. I don't think they're going to announce this tomorrow. It's just too complicated. The mechanisms can't be sorted out within a day, within a week, or even a year. But what we need to see is there going to be a kind of criteria for BRICS expansion? What kind of countries are they going to let in, right? Right now, we have quite a bit of interest from the big oil producers, Saudi Arabia, Iran, UAE. If they come in and if they start pricing oil away from the dollar, we could really see an acceleration of what's going on between the UAE and India, right? The rupee for oil trade. And that could actually start chipping away more of the dollar's hegemony over time, right? And one idea we have to understand is if less dollars is needed for trade, that will mean there's lesser dependence or lesser need for US treasuries. And that gives us two outcomes. One, where will the money flow? I suspect some of the money will flow to commodities, right? Some of it will flow to gold, some of it could go to silver. But the more important part is that it could actually make the cost of treasuries go up. And right now, we know Janet Yellen, she's selling a ton of US bonds. If I'm not wrong, in June to July, after they suspended debt ceiling, they actually borrowed $800 to $1.2 trillion worth.
That's right.
So they're piling on more debt over debt. And if the interest rates keeps going up, they're just going to accelerate a point where we reach a fiscal cliff. And what is the fiscal cliff going to be? Is it going to be when we come to a point where 40% or 50% of the net interest payment will become as a percentage of federal revenues? So for every $10 in federal revenue you bring in, what happens when $4 or $5 is actually needed to pay off the debt? What will happen then? Will the American people suddenly wake up, or will the rest of the world say that, oh no, we can't loan you any more money? So this is the big thing that I'm actually looking at. Which members will be enrolled into BRICS, and how much more money will Biden borrow?
Right. So you just brought up earlier, maybe 10 minutes ago, you talked about the trap with the US and the paradox of the gold,
right?
Not being able to add or subtract. And then you just said the same thing in a way, and another way, in terms of the debt ceiling being ignored. And then if the debt's at 32 trillion and interest rates are at 5.5 now, that's our single most that's a larger expenditure than our defense budget, which, by the way, is larger than the next 10 nations under US combined.
Right.
There's a graphic on that. Peterson, you just Google Peterson did research on that. So, I don't think the public's going to name a politician that can go out and run for re-election and say, guess what, everybody, you should be happy with the fact that we can't service the debt. I mean, it's almost close to a default or being insolvent. If you were any other business, you would be declared insolvent. Well, Sean, I'm glad you gave us an insight of what you're going to be looking for. We're going to urge everyone to follow Sean Fu on his YouTube channel. And would you come back and visit with us maybe 4 times a year? Give us like a quarterly update?
Yeah, sure. Just let me know.
Okay. Have a great, I know it's probably 9:45 p.m. in Singapore, as it's around 9:45 in the morning here on the East Coast. Stay awesome, my friend. We're big fans. Super honored to have you on today.
Hey, thank you, John. See ya, man.
See ya.
See ya.
This is the type of shit I love. Thank you, Sean Fu, for being such an amazing addition to the SilverDegenClub's ApeTv crew. You are our Singapore foreign correspondent that we truly love. Now, it is time to shout out the Degen Patreon supporters. GG Bullion and #Drain, the mint is stupid, are the 2 mad lads who offer the blessings of fiat trash to fill our Viagra-filled dreams. If you want to be shouted out, just join our Patreon. And please remember to like, subscribe, and share. See you all later, and make sure to enter my J-hole this Friday.